What's up, guys? Dirk here. Today I have a special guest who's been on the channel before. He's got an excellent track record as an entrepreneur, as an investor. He's an early Bitcoin investor, and he has an excellent track record of macroeconomic predictions of the big picture of what's happening and where things are going. So, it's my pleasure to introduce to you Max Wright. Max, welcome back to the channel.
Thanks so much for having me, Dirk. Always a pleasure to chat to you.
Awesome. So, before I get started, before we dive into today's content, where we're actually going to look at the big picture of what lies ahead for Bitcoin and the crypto markets and the overall economy, Max actually has a online web class. It's a free event. He does this once a year, sometimes even less than that. If you want more information where he goes into a lot more detail about that, it'll be in the description down below. So just click that after you watch this video. You can sign up, and for a limited time, you can get access to that for free.
Should actually, Dirk, before you go on, I should touch on that just a little bit. This is actually, it's a very, very special thing. As Dirk said, I only do it once a year, but I only invite people, it is invitation only. I only invite people who come from the subscribers of trusted friends I know who are excellent teachers themselves. And there's a very good reason for that. I skip over all the easy, basic stuff. See, if I don't know who's there, I've got to teach people what cryptocurrency is, what fiat is, all of these things, central banks. Listen, if you're coming from Dirk, you know all that good stuff. So I get to skip over all the basic stuff and do the really advanced training. I only do this once a year for free. So it's really, really special. And I definitely recommend you get on there because I'm going to give you the blueprint of how the next couple of years are going to get like sort of manifest in all of the different asset classes that you care about. Crypto and precious metals and stock market and real estate and good bullion. You'll have the full blueprint of exactly how everything's going to play out in the next few years. But the reason I can get through all of that is because I go fast and I speak at a very high level for people who understand things, hence it's invitation only. So I thought that was important to add.
Absolutely. So if you want that, link is in the description down below. So Max was on the channel. We had a conversation back and forth here at the beginning of the year in January. I believe we just had the ETFs approved for Bitcoin, and the big event was the halving was coming up in April. So now it's in May as we're recording this, and we've had the halving. So far, the Fed hasn't cut interest rates, and there's no kind of anytime soon that they're looking to cut. So, Max, what is your opinion on Bitcoin, on crypto, the whole cycle? Have we peaked at the halving? We hit 74,000 and we've dropped back down. What is your kind of idea of the cycle now?
Yeah, I definitely do not think we've peaked so far. I think there's plenty more upside to go. And in fact, right now, I would say we're in a bull flag. I know you know this, Dirk, but for people at home, a bull flag is when there's a really big run up and then it kind of chops sideways down for a little bit. And it looks like a flagpole and then a flag, right? That's called a bull flag. The reason it's called a bull flag is because way more often than not, you get the flag up, you get a choppy sideways down that looks like the flag, stays in some range here, paints a flag, and then if it breaks to the upside, you get another pole all the way up. So you get the pole, bull flag, up. That's how that looks. So I think right now we're in a bull flag, and at some point we're going to, break out of the top of this bull flag, and then it will be off to the races. And it wouldn't surprise me if in, almost one fell swoop we break through to six-figure Bitcoin, over $100,000 Bitcoin. Now, when we break out of this flag, I'm not exactly sure. Those ones are a little bit more in the hands of the gods. Could be on the back of some news or some narrative change or some world event. But I think that is what we are looking for. And of course, there's no guarantees in trading, there's only probabilities. So there could be some black swan events, and there's plenty that could go around. I think the world is in a precarious position. And that's what makes things so challenging at the moment. See, back in, I got really famous making really, really accurate calls for years and years, throughout from like 2013 to 2019. We went through two big bull markets, two big bear markets, and I kind of nailed the tops and bottoms. But I feel like it was almost cheating. It was a very calm world. And it was like if you're sitting on a lake and there's a gentle breeze and there's a sailing boat. It's like, well, where's the boat going to end up? It's like, well, I can see which way the breeze is going. And it's like, it's probably going to end up, over in this direction. But now I think the world economy it's almost like a violent hurricane in the middle of the Atlantic. And, I have no idea. It's harder to predict for sure. Does this boat wash up, on this side of the Atlantic or on that side of the Atlantic? And it's much, much harder to predict because there's a violent storm all around us in so many different things. I mean, just off the top. You've got the massive national debt. You've got this huge problem of inflation. You've got the Fed that is talking tough, but on a turn of a dime, they can change their mind and print tens of trillions of dollars for the next crisis and flood the market with liquidity. You've got it just goes on and on and on. The system is so broken and so corrupt that it makes it a lot harder to predict. So from once you appreciate that, you got to kind of come more to an how would I say this, a portfolio management situation. It was just so much easier just to be all in on crypto because you kind of, when the boat's on the lake, it's easy to know where the boat's going to end up. But in a violent storm like this, you really have to understand how you personally are going to manage any kind of situation that comes up. Do you have the cash flow to support yourself if things are, go dangerous? If you don't, then you might have to keep a fair amount of cash reserves in case Bitcoin gets smacked down for a year or two before it takes off. Things like that. So it becomes like a portfolio management thing. But all things being equal, I'll give you some specifics here. All things being equal, in the absence of a black flag, I think right now we're in a bull flag that is a very bullish indicator. And when we break out, we're more than likely going to get to six figures. After that breakout, I think we'll be at six figures probably within a month or two. It should move very, very quickly. There'll be a little pause halfway up, but it'll move pretty quickly on the way up.
Okay, so as long as kind of the markets are going higher, and we're talking here about the stock markets also, which are obviously still in a very bullish market, what do you see happening with them printing money? Do you think they're going to print money, and is there a possibility that they print money without some sort of black swan or without some sort of crisis? Like, do we need a bank failure or something to go wrong for them to print money, like in March of 2020, where it all crashed first and then went up? What do you think?
Yeah, it's a great question. So a little bit of the history here for the viewers. 2008 crisis rolls along, and they sit there and debate for months and months and months. Should they do the unprecedented, which is just print a ludicrous amount of money? I think within a month, they printed like 50% of every dollar that had ever been printed. So they doubled the money supply or greater than that within like a month. But they debated it for a very long time, and they were just trying to decide, should we do this? Are we going to go into hyperinflation, et cetera, et cetera. Took a long time to do it. Now let's fast forward to 2000 and COVID comes along. And there is no such delay on that vote because that debate was had. And for all intents and purposes, they pat themselves on the back that they did it and it worked and there's no fear of inflation. So we can just go ahead and print. So COVID comes along and immediately just print again unprecedented amounts of money, made the 2008 print pale in comparison. This time around, however, we obviously know the story that was followed by very vicious inflation that we're kind of living through right now. And that's kind of really sent shockwaves. That's caused a lot of poverty all over the world, that inflation. So we go through, okay, let's recap it. 2008, huge debate. Should we do it? Should we not do it? Oh, we have to do it. Let's do it. 2020, oh yeah, sure, let's do it. There's no problem. So now the next crisis is going to come along and they're going to be, okay, do we hesitate a little bit now because of the inflation? Are we going to cause more inflation? And I think if you sum up all of those vectors, you have to appreciate that at the end of the day, politicians are cowards. They only really care about their next 4 years or whatever the term is in your country. And so they always print. They do always print. The question is, do they print? Your question was, do they print without an excuse? So that is very interesting. I think in the US, we have an election coming up here in November, and I think they will do whatever they have to do to keep Humpty Dumpty glued together for now. And so if that means printing a little bit here and to stave off any kind of issues, I think they will work hard to do that. And so I think we're going to have a pretty comfortable year because of that. Because it's an election year, let's keep it all glued together. By 2025, I'm expecting some real calamities. Doesn't matter who gets in, doesn't matter who wins the election. It's not a partisan thing. By 2025, you're going to see some real fireworks. And then the question becomes, do they meet that with printing? And I believe the answer is yes. They will print. They will print stupid amounts of money. But to do that, they will need an excuse. And so you will see a black swan. You will see markets take a big hit, probably 50%. But it'll be pretty short-lived, especially in the world of crypto. I think, crypto, so let's go back to 2000, COVID. Bitcoin gets knocked down over 50%, or it goes down to $3,000 from over six. But within about 6 to 8 weeks, I think, if my memory serves, it was back. It was back to its like 6,000 mark. So it was super fast. And Bitcoin, you have to understand, it gets hit first and it gets hit hardest, but it recovers the fastest as well. So then you've got other kinds of markets like real estate market. Now, real estate market, it takes a long time to get hit. But the real estate market still hasn't been punched in the face from the interest rate hikes way back when. The reason real estate is such a laggard is you have 30-year fixed mortgages here in the US, right? So no one has to refinance. No one's suffering these high interest rates except new buyers. All the old buyers are doing just fine. You've got long leases, so people take a lease. Just in residential, you take a lease for a year minimum, sometimes longer. In commercial real estate, you take leases for typically 5 years. And so, all of these things, it takes a long time for things to hit the real estate market. That's by the way, the real estate market is one of my biggest concerns. I think the real estate market is going to get crushed in 2025 here in the US. And that's going to have an impact right across all the markets, stock market and Bitcoin. So I'm expecting these, big punches in the face for Bitcoin, but I also expect the Fed to print quickly and massively shortly thereafter. And from then you'll see Bitcoin recover very quickly and very strongly. So that's kind of the thesis for the next couple of years.
Yeah, I can see that happening. We have some interesting things happening where at the beginning of the year, they were talking about, we're going to get like 6 rate cuts or something, or 8 rate cuts this year. And now we're already in May. There's no rate cuts. They're even talking about hikes. So that was always my concern. Like if we get the rate cut, that's probably a signal that we go lower based on what happened previously. We also have this yield curve inversion, which is, I think, the longest now in history, like ever. Maybe you want to comment on that a little bit? Like that's usually a warning that something seriously is wrong, right?
Exactly. Yeah. So yield curve quickly for people at home. It's typically the longer you lend someone money, the greater risk to the lender. So you expect a higher interest rate. When they hear yield curve inversion, what that means is short-term interest rates are higher than long-term interest rates in the bond market, and that's called a yield curve inversion. It happens very, very rarely. It's also one of the greatest predictors of recession, and that predictor has been flashing red signal now for, like you said, the longest it's ever done. Usually it comes in quickly and then goes away, but it hasn't gone away. And I think that's to do with the type of crash that we're having now. When you get a big stock market crash and unemployment skyrockets, it's very visceral. We're used to it. We see it kind of every cycle, every 7 to 10 years. We see all of those kinds of things. But right now we're in an inflationary crash and they come around much less often. And so people don't quite understand them. It's harder to read the tea leaves and it's harder to feel it and know that a crash is happening. But we are having an inflationary crash right now. And I suggest that even if unemployment doesn't go up at all from here, and unemployment's under 4% here in the US, typically a pretty good number, makes people feel comfortable, makes people feel like smooth sailing. That even if unemployment doesn't go up, we are still in recession right now. It is going to happen. And let me explain to people why, because inflation is a dirty animal. It's very tricky. It's very deceiving. It's very under the radar, and it's hard to understand what's going on. So if I told people that, in 2 years' time, we are going to have an unemployment rate of 10%, pretty much everyone would be like, oh, well, that would mean we're in a recession. Everyone would understand that. We're familiar with that idea. If I say to people, okay, so, well, first of all, what does that actually mean? So when it means 10% of people lost 100% of their income. And what that means is the economists call it demand destruction. The amount of demand, if you add up all of the people and all the money they want to spend on goods and services, that equals their aggregate demand. So when you get a whole bunch of people become unemployed, that equals demand destruction. They're not buying things and the economy starts to spiral in a downward way. You go into a recession. With inflation, there is very little difference between a 10% unemployment rate and what happens if 100% of the people lost 10% of their purchasing power, or are 10% poorer through inflation? That's the same level of demand destruction. right? That's what happened. 10% of demand just destroyed. It didn't happen concentrated in 10% of people. It happened evenly across 100% of people. And that is exactly what happened. If you just jump on the Fed website right now and look for real wages, and the word real means adjusted for inflation, you'll see that in the last couple of years, wages have gone down by 10%. Well, that means everybody, the whole country, just got 10% poorer. And so that 10% demand destruction has occurred. And but it's harder to see, and the government can say everything's fine, unemployment's at 4%. So it looks different and feels different, but that demand destruction is there. And we can see it in the data right now. We are seeing plummeting levels of savings, right? Savings measures your ability to weather storms. People, when they get poor, they have to tap into savings, and our savings rate of the American public is plummeting. Our credit card default rate is going up. Their credit card balances are going up. People missing out on their payments, people making the lowest paper, all of those things going up, up, up. And so people are tapping their savings, trying to survive. People are tapping into their credit cards and bad forms of debt, trying to survive. And those default rates and delinquency rates are going to go up big time. And then that debt has to get liquidated. The next step you get after that is a freezing of the credit market. All of a sudden, banks go under. All of a sudden, lenders go under of different varieties. And then all of a sudden, there's no availability of credit or limited availability of credit, some reduced level of availability of credit. And that means even if people wanted to, which they don't because they're scared and terrified and they see what's happening, but even if they wanted to, they can't go and borrow money to buy those assets, the houses, the businesses, the other things, or just to survive and pay the groceries, next week. And so what happens is you get that boom, you get that reset. Where prices of those important assets go down. And Bitcoin will get caught up in that, along with the stock market and along with real estate. But like I said earlier, I think Bitcoin is going to be the biggest. It will recover the fastest out of all of those asset classes. So that becomes a really tricky situation, right? Do you sit there and wait for this big crash to come before you jump in? Because I think it's fair to say I think Bitcoin will get hit around about 50%. You'll get to buy Bitcoin at a 50% discount when that happens. But what happens if Bitcoin goes up 300% between now and then? Right?
Exactly.
That's the challenge. That's the torture of Bitcoin, right? It's extremely volatile up, extremely volatile down. And when it moves up, it's blindingly fast and will melt your face off with how quickly it moves up. And so you can't afford not to be in it. So that makes it a very difficult decision. The saving grace for Bitcoin is when this thing happens, this black swan event, I think it's almost a guarantee that the Fed will print stupid amounts of money. And as a result, Bitcoin will recover the fastest. And so, okay, I've got to be in it to win it. And if I get punched in the face with a serious issue, then they're going to print their way out of it. And Bitcoin is a great absorber of liquidity. And it might feel horrible for some months, maybe even like a longer period, like a year or two. But then, I should be pretty well. And so when you add up all of those things, I think it's riskier not to be in Bitcoin right now. And despite the dangers, the upside is there. And Bitcoin is a pretty good place to be. Now, with that caveat saying, you should always have some other kind of cash or T-bonds or something like that, T-bills, I should say, where you can live off for those year or two. You don't want to be in the situation where in order to eat, you have to sell your Bitcoin when it's down 50%. So that's where I say that this becomes a portfolio management issue. And it used to be simple. It's just like, just buy Bitcoin in a couple of years, it'll be great. And I can still say that, with relative confidence now, but the portfolio management really becomes a critical component now. You have to figure out how to manage you and your family for all of those ups and downs. And that's where people get caught out.
Yeah, you need to be able to survive potentially 2 or 3 years where you have another source of income or whatever the case is. I agree 100%. But at the end of the day, the writing is on the wall. Like anyone who studies history, you can see what happens to fiat currencies. Like you can see what is happening with the US, the national debt, how quickly that's accelerating, the money that they're printing. Like this is a one-way street, and it ends with the currency being worth nothing or far less. And I feel like most people have no idea yet what's happening. Do you feel the same?
That's
Like
the trickiness of inflation. It's a harder to see crash The demand
Yeah.
destructions happen just like 10% unemployment. But if it's 10% unemployment, everyone gets it. But 10% real wage losses, that's like, wait, what is that? What does that mean? No money's left my bank account. It's still there. I've still got my job. It feels okay. It's so yes, you're 100% right. People are
Every year, and it doesn't reverse ever. It's not, prices don't get cheaper, it just keeps going up, and like people don't realize, right? So
exactly.
that's eventually probably where Bitcoin steps in, because if we start seeing bank failures like you talked about, I think this year we had the first Republic Bank that officially like went under, so that's probably the first of many. And when that starts happening and your cash isn't safe anymore, because sure you have FDIC, but that's not really great even if it happens. So at least your Bitcoin you can self custody, and when enough people realize that, what's going to happen to the price of Bitcoin, right?
That's it. For now, there has been no major banking haircuts, they call them. So people are familiar. Last year we had a banking crisis. 3 big banks went down here in the U.S., and then of course Credit Suisse in Europe. And now we've just had one more. But and that's all fine and dandy. But as I've said for 10 years, the moment a major first world bank takes a serious where depositors take a haircut, then you're going to see Bitcoin go absolutely parabolic. It'll be like, oh yeah, I can't be trusting that anymore. So yeah, it's a tough situation. Like I said, we're in a storm in the Atlantic, and it's just hard to know where the boat's going to get washed up. And it's hard to know. It's hard to know the exact path it's going to take. But I think what we can say is on a long enough time horizon that a decentralized, apolitical money like Bitcoin is going to do very well over time. You just have to be able to weather the storm.
Yeah, I think so. I'd like to hear your thoughts about the Bitcoin ETFs that have been approved now. How do you feel about that? Is that really a vehicle where it allows maybe pension funds and IRAs and retirement accounts and stuff to come in? Or is it something that maybe like BlackRock and the other big people can use to suppress the price of Bitcoin like they did with gold?
Yes, I mean, there's a lot to unpack there. Let's talk about that suppression because that is a fun one. So you astutely said how they're suppressing the price of gold via the ETFs, and you're absolutely right. They are doing it. Let's analyze how they're doing it so that we can see if Bitcoin is equally vulnerable. Okay, actually, we'll keep it really high level. With regards to the gold ETFs, how is it? Do we know how much gold is there held in those ETFs? And do we know if there is gold there, has it been rehypothecated? Meaning, has it been leased to somebody else and somebody else has a claim on it, and more people have claims on it than there is gold there? If any of those things were true, and they do not have a one-to-one amount of gold there for all the claims on the gold, then in an event of a liquidation scenario, then what's going to happen is a whole bunch of people claim an insufficient amount of gold, and it's like, oh, someone gets caught holding the bag and everyone takes haircuts. What that meant was they sold more gold than was there. So what that means is the price is suppressed because they should have to go out into the market, buy gold, bidding up the price of gold, and then we see price appreciation in gold. But if they're selling gold that's not really there, then they never had to bid up the price to buy it, and so the price of gold is suppressed. The way we say that is they are selling paper gold. It's not bidding up the price, and so they've managed to suppress the price of gold by doing that. Now, Bitcoin is a very, very interesting animal. It is a decentralized open ledger, and so we can see on the blockchain how much Bitcoin they are holding. That becomes critically important. If they say they have this much gold and we can, sorry, Bitcoin, and we can either see that they can or cannot, then that's going to be a really, really big factor in it. Can they sell an infinite amount of paper gold in order to suppress the price of, sorry, Bitcoin, in order to suppress the price of Bitcoin? And the answer is it's certainly significantly harder because the blockchain is more transparent and we can see. So that's good for us. And it's something I talked about in 2013. I had the #1 book on Amazon about Bitcoin. It was 2013, so it wasn't that hard. I think I only sold a couple hundred copies. But it talked about this exact issue and why Bitcoin is superior to gold in that way, and that they can't manipulate it when one day when the ETFs and the futures markets come. So that's kind of cool. Uh, so the other part of your question is it a big deal? And it is a big deal to the upside. And let me tell you why. One of my very good friends is, it's what in America they call them RIA, which is a registered investment advisor, I believe, is that what it stands for? But it basically means they've got the fancy licenses which allow them to be financial planners and be custodians of other people's money. But it's a very regulated industry, and you have to go through one of a handful of bigger organizations that kind of tell you what you can sell and what you can't sell, what you can say and what you can't say, and all those kinds of things, because you don't want a whole bunch of amateurs taking care of people's money, and then one day, oh, things went bad, and they just take all the money to the Bahamas. So it's in some ways it's good, but on the other side is they can only kind of sell approved products. So what happened was, I've spoken to these kinds of people for many, many years, and it was impossible to get them to be in the least bit interested in Bitcoin. They were not interested. And I eventually figured out why. Their, umbrella organization that they live under, they weren't allowed to sell Bitcoin. They weren't allowed to own Bitcoin. So if a client comes to them and says, hey, what do you think about this Bitcoin phenomenon? The moment they say, yeah, it's a good idea, they also have to say, but I can't help you buy it, which means if you want to buy it, I've got to take money out of my account that I'm managing for you and give to you, and you've got to go buy Bitcoin over there. Well, guess what? I don't earn any fees on the money over there. I want you to keep your money over here where I'm earning fees. So as a result, the umbrella organization all day, every day, are teaching their minions, their financial planners, they're teaching them the words to say, the things to say to scare the shit out of their customers, to say Bitcoin is too risky, don't go anywhere near it, you don't want to do it, it's terrible. Now they can. It's like, okay, you want Bitcoin? Yeah, no worries. I'll just exactly the same as buying stock. I'll just buy it. The problem is, it's like moving the Titanic of all of that propaganda. They literally saved propaganda for years and years and years, teach the RIAs, teaching them how to hate Bitcoin, why Bitcoin's an absolute disaster, why it's too risky, why you can't have it under any circumstances, because we want to keep the money here so that we earn our fees. And so now they've got to undo all of that. And they've also got to do it in such a way where they don't look like, fraudsters and like people who didn't actually care about the client. They got to do it in such a way that makes it sound like, oh, things have changed now, and now it's okay for 1 or 2% of your portfolio or something like this. And so this is a very, very slow machine that has to move now. I would wager that a lot of the money pouring into the Bitcoin ETFs is actually retail, meaning people who manage their own money. It's like, oh, it's so much easier to own Bitcoin this way. I don't have to worry about hardware wallets. I don't have to worry about this. And so they're just using the ETFs to buy the money, to buy Bitcoin, and they're the ones punching it into the computer. For the people, and it's generally baby boomers, generally money who the baby boomers went out and became doctors and lawyers, and they just put their money in the savings and they handed it over to an RIA, right? And then that person manages their money, and they have, collectively they have trillions of dollars in those portfolios. It's just insane the amount of money in there. And now that it's going to be a very slow process to turn that Titanic around and say, okay, yeah, Bitcoin's cool for a little bit of your portfolio. And so that's going to happen more and more over time. It's going to take time, but eventually that Titanic will turn. And so eventually it means trillions of dollars flowing into Bitcoin, which is obviously going to be very, very bullish for the price.
Yeah, I agree. So Bitcoin ETF is good. Ethereum ETF, I would like your thoughts on that. Do you think it's ever going to happen?
That's a great question. I heard Michael Saylor the other day say it's the most bullish thing for Bitcoin probably this year and next is the fact that there won't be any other crypto ETFs.
Yeah.
Which is true because it keeps all of this, all of these trillions of dollars money locked up with these RIAs. It makes it available for Bitcoin only and not, the cowboy altcoin world. So it's a good question. Will we get ETFs in other? I mean, there's a very good reason to not. So if they allow an ETF, it's basically giving it its blessing. But there is a really big problem. Bitcoin is a very unique animal in the way it was started. The nickname we gave it was an immaculate conception, right? There's this anonymous Jesus character called Satoshi Nakamoto who comes down, gives it to the world, and then vanishes. And there is no, there's no way, there's no issuer. That's the magic part of it. From its inception, Satoshi just released this thing to the world, told everyone about it, and then he was the one who was doing all the mining at the beginning. Pardon me. He was the one doing all the mining at the beginning, but it was an open way to mine. With all of the other protocols, and I mean literally all of them, the way they came about was some developers and marketers got together and said, hey, we've got this protocol. We're going to release it to the world. Now we're going to keep 20%, but then you guys can mine your other 80%, right? And that changes things. That means there was an issuer. That means there's a head of the snake. That means that in some of them you can continue to issue more tokens in time. That changes things enormously. And according to the SEC rules, that very much puts it in the world of a security. And if it is a security, then it was an illegally offered security. Yeah. And all of those things are kind of pretty black and white at this point. So for the SEC to come out and grant an ETF in Ethereum or any of these other coins, they're kind of saying, we're going to let all of that slide. And at no point in the future are we going to come and prosecute or do any of those things. Now, if they do that and they set that precedent, then how are they going to prosecute anybody? Because now there's no justification for doing so. There's been different levels of egregiousness of the breaking of those rules. But if they allow let's say they allow it in Ethereum ETF and they allow it to get through, well, then how can you go and prosecute one of the other chains? Even if they were more egregious, they still did the same thing. And so it puts them in a very tough situation. So I think there's a really, really good argument to say there will be no other crypto ETFs for the foreseeable future. Whether or not that actually happens is a different story. I think probably it's more likely than not that there won't be an Ethereum ETF at least this year and probably next. I would say at least for this cycle. But there's no guarantees on that. That could absolutely be the case. So it'd be interesting and time will tell.
Yeah, I agree. Personally, I think it won't get approved, but we'll find out. I think the deadline for approvals, where they have to make a decision, is May 23rd, where they have to say it's either being rejected or it gets approved. They can't delay it anymore. So we'll find out soon enough, I guess.
Well, I guess the question becomes, who are the people making the applications? Is it the BlackRocks or is it the smallest guys?
Yeah.
If it's, because that was the big selling thing with the Bitcoin, right? I mean, there's been lots and lots of different organizations who have tried to do a Bitcoin ETF. That wasn't until BlackRock wanted one that all of a sudden, well, now you can all have one. So it'd be interesting to know who's making the applications, and I haven't stayed abreast of it, to be fair.
Yeah. I think we've covered quite a bit. So I think one last question to wrap it up. How do you see the market over the next, say, 5 years or so? Like we've seen over the past 2 cycles, that first in 2017 it was ICOs and that started to grow, and then last cycle it was all the NFTs, and now we're seeing meme coins go crazy. Obviously that's unsustainable. There's 30,000 cryptos. At some point that has to go to zero, or the money keeps getting diluted. How do you see this going forward, crypto as an industry? Does all of that stuff disappear and it just ultimately all flows back into Bitcoin? What do you think?
Yeah, so that's a good thing. Because of the ETFs and as of more sophisticated people coming into the market, let's say, and people who are in very regulated areas or whatever else, I think in time you will see the altcoin market kind of thin out because it's clearly unsustainable. It's clearly silly, and you have to find a greater fool. And it's easy to find a greater fool when someone bought Bitcoin for $100 and it's now $70,000. And now I'm someone who's very unsophisticated, not used to handling large amounts of money, and all of a sudden I'm worth $10 million, and I'm 22 years old. And the meme coin, I saw the meme coin doubled yesterday. It might double tomorrow. Let's do it. So it's easy to find that greater fool in that situation. And so over time, but what that means is, and it's sad, that the Bitcoin will eventually fall into stronger and stronger hands. Meaning, that person will, I'm going to bet on some silly token. And eventually what that means is they're going to lose their money. They sold their Bitcoin to somebody else so they could buy some silly token. The silly token went to zero, and now they've lost all their money, but the Bitcoin's now in safe hands. So yeah, I think that's definitely how it goes over time. Let's go through some of the narratives. that, because some of them really, really bother me. Which narratives have legs and which ones don't? The meme coin one, that doesn't, I don't get it at all. So there's an argument to say that there's some level of community built around meme coins, and community is value, community online. So the idea of even using it like a loyalty program, or if you own this token, then you can come to certain events, even digital events. So there's an argument for it, but I think it's very much in its infancy, and so we're going to get. That doesn't necessarily have to go up big time for me. So I'm not particularly impressed with the meme coin narrative. Let's talk about another world narrative that people are thinking is a big deal this time around. Let's call it real world assets. And this is the idea of tokenizing real world assets. I think this is yet another terrible, terrible narrative that does not hold legs. It's not to say it won't go up. You'll see tokens in this space go up 1,000x because people are speculating on it. But I don't think it's going to have, in long term, it's going to have any actual legs. And here's why. The magic. Look, I've already talked about that in this conversation, basically, with the comparison between gold and Bitcoin, and how the markets are manipulated. The beautiful thing about Bitcoin is that it's totally disintermediated from the real world, and it's built in such a way that the authorities cannot grab it. Let's think about in the Great Depression that they nationalized gold, right? Let's think about all of the times in history that tyrants have just stolen the property of citizens. And so for the first time ever, Bitcoin's a way to hold wealth in a way that the authorities can't seize. And that's one of its magical properties that makes it the greatest thing ever. When you use a blockchain to start managing real world assets, you're literally undoing one of the magical things about Bitcoin. Now authorities, so if you use a blockchain to manage securities and say who owns which stock instead of using the stock exchange, well, it doesn't matter. Authorities can just come and take the stock and force, if you buy Apple stock, to not pay the dividends in that direction, to pay them in that direction. And so you've now brought in, the blockchain is cumbersome. It is more expensive to use than just normal databases. It's significantly more expensive to find developers to work on it than Oracle databases. And so you're introducing a lot of complexity with blockchain and headache. Now you get a lot of benefits in the world of Bitcoin with the fact that there's no real world assets and authorities can't seize them, and that trade-off is in many circumstances well worth it. But if you start using a heavy, pain in the ass, expensive, bloated blockchain to manage real world assets, there's absolutely no benefit to that whatsoever. So for 10 years, people have been coming to me and say, hey, Max, I got this great idea. Will you help me support it? I'm in the real estate industry. And so what I'm going to do is I'm going to put all of my properties on the blockchain and people can buy it. And I'm like, stop. No, terrible idea. Worthless. You're just making a very, very big, huge headache for yourself, breaking all of the securities laws. Governments can come and seize your properties. And now you've got a big, heavy, annoying blockchain on that you got to maintain. Absolutely ridiculous. Don't do that. And for some reason, that lesson has not, punched people in the face hard enough over years. And people are trying to get real world assets on the blockchain, and it's just a terrible idea. So that narrative I positively hate. A run from real world asset narrative. Some of the other narratives, especially the yield ones, I think those are quite interesting. Stablecoin narratives, those are quite interesting. So we're going to see how this plays out this year, but I think there's a couple of really big red herring narratives that I would stay away from. Real world assets and meme coins. Not to say you can't make money with both. Speculators will go in and prices will go up and prices will crash. And if you time it right, you'll make an enormous amount of money. But long term, I don't think those particular narratives have any legs.
I agree with you. It's speculation for sure. Long term, indeed, Bitcoin. And we'll see where it goes. So Max, I think this has been great. Very informative. Guys, thank you for watching. If you do appreciate this, smash the like button, leave a comment with your thoughts. And like we said at the beginning of the video, if you want more of Max's wisdom, he's got a free online web class. The link is in the description down below. He goes into great detail of these various asset classes, especially also more real estate, the stock markets, and how to leverage and multiply your wealth in a potential upcoming crash and recession. So go and check that out. And I will also leave a link to Max's channel down below. So thanks, Max, and see you next time.